Have you ever tried to decipher the jargon-filled speeches from the Federal Reserve? It can feel like unraveling a puzzle of economic terms. But fear not. Today we're going to decode the Fed and unveil the truth behind its words. It all starts with the infamous FOMC statement, which happened yesterday. This document is the key to understanding the Fed's decisions. How do interest rates impact the economy? Well, when the Fed raises rates, it slows down borrowing and spending, which can help control inflation, but it can also slow down economic growth. Inflation is another crucial factor. When inflation rises too fast, the Fed may react or overreact by raising rates to maintain price stability. But it's not all about just inflation and interest rates. The Fed also closely monitors the stock market. A volatile market can have a ripple effect on the economy. Paying attention to the Fed speeches is crucial. Three-word matters. Is the Fed leaning towards raising rates or adopting more dovish stance? Analysts study these statements, searching for clues and deciphering the Fed's intentions. They carefully analyze each word for any hidden messages. The Fed's actions impact our daily lives. They determine mortgage rates, credit card interest rates, and even the cost of borrowing for businesses. So with that said, let's get right into what's going on in the market right now. Here's our market timing graph. We are still today on a 3-month graph, hitting a new 3-month high. Closed candle means that today's close or today's price action is lower than the open, which is what I call a bullish bearish candle. It's bullish because it's higher than the previous day's close, but it's bearish because the price is falling from the open. This is key. The market, we have an indicator called the MTI. Market timing indicator, cast on a scale between 0 and 2. When this indicator gets to the value of about 1.5 to 1.6, the market is looking for a top. So with all of this going on, the market is still looking toppy. I want to put that out there because I need you to be prepared to use some of the indicators or some of the videos that we've talked about taking your profits at the right time, the techniques to do that. And I want to get you prepared to be more cautious in the market than anything. Now, I will provide you some stocks to take advantage of the current market's conditions, but this is key. I don't want you to back up the truck. And a lot of the reason why the market is still going up right now is because of FOMO, the fear of missing out. A lot of people have come late to the party, driving the market higher. And those of us who are holding these stocks have to make the decision. What do? Do we take our profits or do we get greedy? Greedy is a bad thing, but it can be good if you temper the greed. So this is the current market's conditions. Now I'm going to start off with a graph here because we did raise the interest rates, right? The Fed did raise interest rates. And there's something that I'm going to talk about, which I need you to pay attention to. You're going to hear that the Fed raised the interest rates to the highest level over the last 22 years. And I sit back and I go, what? All right, yeah, that's true. But since 1955, look at where interest rates stand. Now, yes, I do understand that this is 2015, but the interest rates right now are still historically low. All right, so I'm going to keep that in mind. Now, let's take some of the things that the Fed said yesterday. At the news conference, Fed Jerome Powell acknowledged inflation slowed down in June, but added, while it's welcome, it's just one report, 1 month of data. He said that the process of lowering inflation to the Fed's 2% goal has a long way to go. What does that mean? That means he's adamant about getting inflation down to where he needs it to be. It's sitting at 4%. I think it's a little higher than that. And right now, he's saying that we got a long way to go. The problem is with that, it's going to take a lot to get there. It's still going to take a lot to get there. Now, this is what I was talking about. The move nudged the federal funds rates to a range of 5.25. All right, 5.5. There it is. That's the number. 5.25 to 5.5, the highest in 22 years. That's why I brought that first graph up. I needed you to take that and keep it in perspective of where we are historically, but the media wants to pump up 22 years. Okay, that's fine, but we're still historically low. Moving on. The labor market continues to be strong, he said, noting that the Fed wants to bring supply and demand in the economy and the labor market into a better balance. Otherwise, consumer prices could surge again. Labor market, people are making money, people are working. Wages are gone up. I keep having this discussion. Has it really gone up?
to keep up with inflation. With inflation falling as much as it has, I think that the nominal wages right now are keeping in line with inflation, actually doing a little better. Nominal, not core. All right. So from that perspective, if people are making money, they're going to spend money. Spending money does what? Raises inflation once again. Noting the Fed will see 2 more inflation reports, 2 job reports before its next meeting in September. Powell says it's certainly possible we would raise rates again at the September meeting, and it's also possible we will hold steady. What does that mean? He's not trying to panic people, because if he gives away his hand right now, people are, oh man, and everything will go flying crazily all off the roof. I think that he pauses. I think he goes through a path right now of raise, pause, raise, pause. That's what I think goes on throughout the year. And I'll tell you why I think he's okay with raising interest rates in a second. In a statement, the central bank said that the economic activity has been expanding at a moderate pace. Moderate pace, an upgrade from the previous description of modest growth. That's a possible sign that the Fed believes, and this is why I think he will continue to raise at least 1 or 2 more times. The economy could withstand another rate hike. That sturdy growth may push inflation higher again. Rising price, people spending money, rising prices. Inflation is going to rear its ugly head again. I don't know if he gets down to his 2%. That's my own personal opinion. I think that if the economy is still at a modest growth, that is a sign that inflation is going to rear its ugly head again. You know what else is another sign? Rising oil prices, another inflationary sign. All right, job gains have been robust in recent months, and unemployment rate has remained low. Fed added, echoing its previous statement. The unemployment rate has remained low. Normally, when the Fed does what he's doing right now, unemployment jumps, but not in this current scenario. Again, this adds to the point that people have money and money to spend. You know what else shows me that? Travel stocks. Travel stocks are still rocking and rolling because people have the disposable income to go on a trip, or they're willing to put it on their credit card and worry about it later. We're seeing strong spending and a strong economy, and that made us confident that we can go and raise interest rates for a 3rd time since the Silicon Valley bank crisis in March, Powell said. And this gives me reason why we still have at least 1 more, maybe 2 more rate increases. The latest rate bump means another raise, and now this is the other side of the coin. Rise in borrowing costs for consumers. That slows the economy down, because if I want to go borrow money, I got to borrow it at a higher rate, means I got to pay it back at a higher rate. Businesses, it's going to hurt businesses. How do I know that? They're laying off a lot of people, all right, who got a reprieve when the Fed paused its aggressive hiking campaign in June. Rates for credit cards, adjustable rate mortgages, which is why people are not selling their homes, but people are buying new homes. Auto and credit card crisis is coming. That's what I think. And other loans are now poised to climb again. So what is the state of the current economy? Barclays says that a still resilient economy and stock market will persuade the Fed to raise rates once more. On Thursday, the government is expected to report the economy grow fairly solid at 1.8 in the second quarter, faster than many forecasters projected earlier this year. Last month, employers added 209,000 jobs, and average wages grew 4% annually. Both mark slowdowns from the earlier paces, but are still strong showings. Initial jobless claims, a gauge of layoffs, have retreated towards historically low levels after rising in June. The economy is supposed to be slowing down. Jobs are supposed to be hard to come by. Consumer spending, big one here, the economy's main engine, is still robust despite higher borrowing costs and prices. A core measure of retail sales and exclude volatile categories increased sharply last month. The positive economic backdrop likely makes the Fed skeptical that inflation will remain on a downward trajectory towards its 2% target without another rate hike, Barclays wrote in a research note. The resilient economy also seems to be persuading the Fed officials that the inflation could be tamed without triggering a recession. Powell said Fed staffers are no longer predicting a downturn. There is a pathway. All right, so that's a lot that came out of the Fed speak. All right, put me back on, and we went through it. All right, plain and simple. One statement that did stand out that I didn't put in here was that we have not felt the full effect. What did he write? We have not, the full effect has not been felt by what the Fed is doing. We're complaining about him cutting, about him raising interest rates. We still haven't, and the job market shows that. The job market shows that. All right, so what did I do? I used one of the stock picking techniques to find you some stocks that I did recently looking at industries and sectors. I went to I did a search, 10-day price delta on sectors. Here's my top 5 sectors. Why did I leave a couple of them unchecked? Because I was looking at the graphs. Let's do this. Let's look at a graph of these sectors. All right, let's do that real quick. Put this on a 3-month graph. Why did I pick these sectors? Look at that. Breaking out of resistance, broken out of a channel, rising, good volume as well. Instruments broke through resistance. I'd like to see if it could stay up above there. I'd keep my eye on this one. Paper, 2 days off of a 3-month high. Office, right at a new 3-month high. Petroleum, you can't keep your eyes off of petroleum. All right, it's just too good to be true. I can't keep my eyes off of you. All right, so those are my 5 sectors. And from the 5 sectors, I looked at 2 stocks from each sector, looking at high CI, high relative value stocks. Here's my list for you today. Top 10, if I scroll over, very diverse in the stocks. Now, I come back when I look at this, I come back and I say, be careful of the current market's conditions, all right? Stay with me to the end. I got a super play. These are my great plays for you, but I've got a super play at the end that I'm going to give you that should really help you in the current situation. Notice I've got no more than 2 stocks per sector, very well diversified. All right. In the petroleum part, scroll over again. In petroleum, I've got Vista Energy and I've got YFP. In insurance, I've got Arch Capital and I've got Skyward Special. In paper, I've got Silvamo and I've got Clearwater. And then in office, I've got Brady Corp and I've got Ennis. Now, the cool thing about this is these may be some stocks that you've never heard of, and that's okay. Notice that every one of these stocks has an RV above 1. Notice that for the most part that these stocks are undervalued. That's hard to come by in the current market situation with stocks being so overbought. The only stock that is overvalued in the list is Luna. At 834 with 759, but every stock has a relative value above 1. Now, these are more what I would call growth stocks. As the market is still going, these are stocks that are considered growth stocks. Notice that the earnings growth for just about all of these stocks, with the exception of Ennis, have double-digit earnings. So if the market continues to go up, I've got you in a good, solid list of stocks that should be able to continue to go up with the market. But I'm going to give you your bonus play right now. With the market looking the way that it is, this is my super play, the volatility on the S&P 500. It's at the bottom of the list. Normally, when the VIX is at a value of 20, there's a heightened level of volatility in the market. This is my play to keep your eyes on. If the market does turn around, because we are sitting at levels of high, volatility is going to spike like nobody's business. So this is my super play. These are my great plays. These are good quality stocks. The relative safeties are not all there, but that's fine. They're good quality, growth, aggressive stocks with double-digit earnings growth. So with that being said, folks, I want you to pay attention to what's going on in the market. Listen to what the Fed says. Hopefully, we've given you some good insight on the path that the Fed is going to go. I think we've got at least one more Fed rate hike. Maybe 2, we'll see, but I think at least one more. I think on the next one, he may pause, but given everything that I just showed you from what he said, he might go up another quarter basis point again. But keep in mind, all of that is to slow down the economy. Even with the raising of the interest rates, it's making it harder to borrow money. mortgage rates go up, companies have a hard time, and they're paying people more. Why? Because they need people. And now the wages are going up better, but still are they commiserate with inflation? I think inflation, with the fall of inflation, wages start to look better. So if this was something that was well worth it for you, don't forget, folks, hit the like button. Let me know in the comments what you think about what we just deciphered from the Fed. Are you on board with that? Do you have your own ideas about it? Did you hear something differently that I didn't hear? Let me know in the comments. Thank you for joining us for this video. This video currently is over. Until next time, see ya. Hey VV Nation, you know that we can analyze any stock in a matter of seconds. Do you want to analyze any of your stocks for free? You want VectorVest to tell you what you really need to know about that stock? Well, you can. If you go to www.vectorvest.com/YTFSA, you can get a free stock analysis on any stock that you're currently holding or are possibly looking at. Folks, what do you have to lose? Do that now and analyze any of your stocks in a matter of seconds.